Are trust accounts held by insurance brokers and travel agents considered similar to a lawyer's trust account?
So the only exemption, I guess this is really the answer. The exemption for the listed trusts includes trusts that are required under rules of professional conduct. So that applies to a law firm's general trust account. But client-specific accounts do not fall in that exemption, and that is why they need to be included. So if you have, in a different profession, you hold monies in trust for clients, whether that is you're a lawyer or not. If you don't fall within that particular provision, and to be honest, I'm not too sure if there are other rules of professional conduct that don't apply to lawyers that would fall within that scope. But you most likely have a reporting requirement. So I think just as a general comment, these are exemptions, so you have to fall within the exemption. Unfortunately, with the scope of these rules being so broad, the default should be assuming that you have a reporting obligation and then seeing if somehow in existence for less than 3 months, the fair market value of the assets, somehow you fall out of the rules. But unfortunately, the way the rules are listed, there's exemptions rather than conditions that you have to meet.
When a trust was created decades ago and the settlor has died and their information, their SIN, their tax number is not available and they no longer have a residential address, what should be reported?
So again, in that situation, you can't be expected to do the impossible. I think and this is not legal advice necessarily. I encourage you to reach out to me if you have specific questions, but you can only do what you can do. And I think providing the reasonable efforts that you've taken to acquire that information, so whether that's making reasonable inquiries for people who would have the information, and setting out that all the information you do have. So it sounds like in that situation, you'd at least have the person's name, perhaps their last known address, but you might not have their SIN or date of birth, but you could assume their residence was in Canada. You would want to set out that information to the best of your ability, last known information, and perhaps providing a note on the form to say, this is the last information available. We've made such and such inquiries and are unable to confirm the rest of the details. The requirement is to make reasonable efforts. So I think that as long as you do as much as you can to get the information, you won't be penalized for not providing information that is unavailable. Again, these rules are very new, so it's hard to see how strict the CRA will be in applying them. And it may be that guidance is released that sort of walks back what's required. But I think for this first round of reporting, trustees and tax preparers should really take as much caution as possible and try and do their best to provide what they can.
Okay, here's a two-parter. A parent adds an adult child as a joint owner of a bank account to enable the child to assist with bill payments and other banking matters on the parent's behalf. Both parties recognize that the assets in the bank account are to be used solely for the parent's benefit. The parent includes all the income from the accounts on their T1. The bank account had a balance of greater than $50,000 in the year. So the two questions are, 1, is this a bare trust for the purposes of the new reporting requirements? And 2, if so, would both the parent and the adult child be trustees if they both have individual signing authority?
So this sounds again like a resulting trust arrangement or perhaps a bare trust arrangement. There certainly is a reporting obligation as a bare trust, I think, with the description of the facts there. And as in terms of who the trustees are, I think you could list both the parent and the child as both trustees, since they both have signing authority, but it does sound like a bare trust arrangement that would be reportable.